Good evening, my fellow investors. Tonight, here on the VectorVest channel, we're going to discuss the state of the American stock market. My name is Glenn Tompkins, the Senior Stock Market Strategist for VectorVest. With a lot of news going on in the world today, the stock market is going through some dismay, some turmoil, a lot of volatility. Well, we're going to discuss that and see where we're heading, where we're at right now, and where we can see ourselves going after all of the turmoil and the dust settles. First off, there's three things that move markets globally: earnings, interest, and inflation. You can add more, you can take away more, whatever you want to do. Earnings, interest, and inflation moves markets globally. Let's start with earnings. Earnings is when companies consistently meet or exceed their earnings expectation. It makes more people interested in buying in the stock, and the stock will continue to rise. Companies that make money have the ability to invest more into that company, hire more people, go and put some money into research and development, which is very important when it comes down to a company making money. Interest rates. Interest rates are the ability to control what's going on in the market as well. Interest rates is the price of doing business. High interest rates, companies have a hard time borrowing money, or if they borrow money, they've got to pay it back at a higher interest rate, which takes money out of their coffers. Now that makes it so that they have to lay off people, and that's something that's going on in the market as well. A lot of companies laying off people because the bottom line is being affected. So higher interest rates are a problem. Recently, we started dropping interest rates. I didn't think we needed to do that right now because it's tough to drop interest rates and rise in inflation. Well, that brings us to the third thing: inflation. Inflation is the price of goods and services, the amount of money that we as investors or people in the economy have to spend. Inflation is an issue. All right, now inflation was at a high rate of 9%. We started to raise interest rates to stem the tide of inflation. And we did. We brought it down from 9% down to 3%. And we're still sitting at that range right now. So earnings, interest, and inflation. We all know that you go to the store, you go put gas in your car, prices are high. But guess what? Even with the new administration that's in, no matter what we do, prices are going to remain high. We can hopefully try to artificially bring that down. But the main reason, or the main way we're going to be able to bring inflation down, is when supply and demand hits it. If we stop, as people stop buying the things that are expensive, those prices will automatically have to come down. Supply and demand at that time. All right. So earnings, interest, and inflation are the three movers of the market. Let's talk about what's going on in the market right now. Looking at our VectorVest composite, this is the way that we determine what's going on in the market. This tracks over 9,000 stocks. A lot of people track the S&P, the NASDAQ, the Dow. That's great. Those are staples that have been around a long time. But we feel that this is a better representation of the broad market movement, and we use it to be able to really discern what's really going on in the market. There's two indicators that we have in the system called the MTI, or market timing indicator, and the buy-to-sell ratio. These indicators, with all of the turmoil that is going on, helps us to determine whether or not the market is looking for a top or looking for a bottom. We all know that the market goes through cycles. The market rises, the market tops, the market falls, the market bottoms, and it's a cycle that goes on over and over and over. Where are we currently in the stock market in that cycle? Well, we can clearly see that with all of the news that's going on, job layoffs, cutting back on government spending, all those things, tariffs, have affected the market to the downside, as you can clearly see. But is it enough to really show that there's a real pullback in the market and the market's ready for a reset? Well, currently, you look from this high to where we are right now, that's a pullback. But I can look at these indicators, the MTI and the buy-to-sell ratio, they are not quite at the levels of where the market, after this pullback or during this pullback, is currently looking for a bottom yet. Now, the MTI, part one of this, is at that level. When it gets to a level of 0.60, the market is starting to look for a bottom. Keywords are starting to look for a bottom. The next indicator, the buy-to-sell ratio, how many stocks in the system out of 9,000 stocks are buy recommendations compared to sell recommendations. When we get to a low number, or actually a higher number of sell recommendations, the buy to sell ratio will get real, real low. Currently, it's at 0.28. When it gets to a level 0.20 or below, the market is starting to look for a bottom. So the MTI is there. The buy to sell ratio is not quite there yet. Why is that so important? I want to show you something. I'm going to go back in time, looking at these nice run-ups in the market. What happened prior to that? Let's go back to 2020. Big pullback in the market. Let's go look at the MTI at 0.21. The buy to sell ratio is 0.02. Way below those levels where the market was starting to look for a bottom. When I say starting to look for a bottom, it doesn't mean the market is going to turn around on a dime and go back up. How do we know when the market is bottom? When the market stops going down and it starts going back up, which happened here. But look at those levels. The market was clearly looking for a bottom, and what happened? The market took off nicely. Let's look at this little pullback right here. This was back in 2022. We were at the levels. Again, MTI at 0.36, below 0.60, and the buy to sell ratio at 0.04, below 0.20. It took some time for this to move, but finally it did, and it ran up into the most recent levels of new all-time highs on the market. When I say that the market is definitely in need of a pullback, I don't want to say a crash, but a correction. This is why. During this time, stocks were overvalued, way overvalued. Why? Because companies were making money, companies were doing well, people were getting into the market. Where else were they going to put their money? Into the stocks that they knew, and the stocks that continue to beat earnings. Stock market rose, rose, rose. Now, most recently, with the new administration in, all right, this is the brand new high, 11/25/2024, just after the election, new high. But since then, we've pulled back. I'm going to zoom in. We've pulled back. Where are we currently? Well, from this high to we are right now, that looks harsh. It feels harsh in the market. There's no ifs, ands, or buts about it. But let's go look again. We're not quite there. We're starting to look for a bottom. What should you start to be doing right now? Getting your shopping lists ready. Tariffs. Let's talk about tariffs. Tariffs, short-term, long-term, will hurt. But if the desired result from the tariffs happen, then we can start taking the tariffs off. I don't know if that's going to happen. And I think that the worldwide craze over what's going on with the tariffs, we still have more downside. I personally think that we still have more downside in the market during this time. This hasn't worked its way all the way through, and it's going to cause hurt. Tariffs will cause a rise in inflation. There's no ifs, ands, or buts about that. American people will pay more because of the retaliatory tariffs against us. There's no way of getting around it. But hopefully cooler heads will prevail. People will come together, and there'll be some sense of compromise in regards to what's going on. And I know a lot of people out there saying, why are we putting tariffs on our closest allies, especially in Canada? I can't answer that question except for there's a desired result from the current administration that needs to be achieved. And if that happens, then this tariff will start to pair off, and hopefully that'll work out that way. But at least, if nothing else, it will bring people to the table to do some compromising in regards to what each side is looking for. Whether you agree with it or not, it is a tool designed to get a desired result for our country. All right? That's what it is. Whether you agree whether or not it should have been done, I got no control over that, nor do we. But we've got to play what the market gives us. The market is going down. Yesterday's video talked about getting into country ETFs. Now, the interesting thing about this, with all of the pullback in the market, algorithms will kick in, start to push the market higher. I don't know if right now, with the weight of the tariffs, if the algorithms can really outpace the downward move in the market. I think because of the craze behind it, the market does have some more downside. All right, so we'll keep looking at that. But we're in the phase coming from a top, going down, and now we're looking for getting to a bottom and getting ready for a grand opportunity to get into some bottom fishing. And here at VectorVest, we're going to get you into the market at the right time. A lot of people pulled out in the market. But guess what? You're going to know when to get back into the market, which is why you need to, if nothing else, even if you're not playing the market, keep in tune with our channel. If you're brand new, make sure you hit a subscribe button, hit the bell icon because we're going to be giving you videos so that you know the right time to get into the market, even if you are out of the market right now. So as I look today, as I record this video, a little bit of a rebound going on today with the wick forming at the bottom of the candle, but still the overall candle for the day on the VectorVest composite is overall red and filled. What do you do during these times? Well, you start to look for hedging your portfolio if you haven't already. You look at gold. Gold usually is a safe haven for the market when the market goes down. And we're going to talk about oil at some point in time because we're all about, well, this administration is all about drill, baby, drill to bring the price of oil down. Again, the commodity itself may not be the way to go, but the oil services, the drilling services, those may take off tremendously. What else could you look into? Defense. I think that this administration is definitely going to play a heavy role in bolstering our defense. Defense is another way of looking at things as well. Now, when I look at AI, I still think it's a hot industry, just not right now. Do you know that 80% of the stocks move with the market's direction? So even the high-flying stocks that were doing well are going to succumb to this right now. You've got to pay attention to the chart. The news is out there. All of the news is out there. Everybody's worrying about everything. We have the VVC. We're going to watch it. Trade the chart, not your heart. You may think that the market needs to do this, that, or the other thing. Market ain't listening to you. The market's not listening to you. So when I look at overall what's going on in the market, I look at there's a lot of news. There's a lot of opinions. There's a lot of wants. There's a lot of desires. What I want you to pay attention to is what's going on in the market and take what the market gives you. The market is currently going down off of this high, sitting in the channel, broke through, coming down. I got another level of support. Take what the market gives you. I still like the idea of contra ETFs. But if you're ready to get your shopping list ready now, I'm going to go to the Unisearch tool, and I ran a search called Trending Thursday Industries. What I'm looking for is the industry RT Delta 30-day sorted. So the stocks or the industries that have moved the most by RT over the last 30 days, here you are. Putting that up here for you. Let me move this up a little bit. These are industries that I want you to keep your eyes on right now. Retail, discount variety, computer systems, aerospace and defense, telecom, home textiles, energy clean. There's a lot of industries with RT, relative timing, that has moved up nicely over the last 30 days to keep your eyes on. I'm not telling you to buy any of this right now, but this is a good way to get your shopping list ready. So the state of the stock market right now is just in a little bit of a turmoil. But you know something, markets go through this. It's part of being part of the cycle, but understanding where we are and how to take advantage of it. Soon all of this will weigh itself out. And when it does, we'll hopefully be in a better position for the market to reset and give us a great bottom fishing opportunity. Folks, that's all I got to say. That is the state of our American stock market right now. There's a lot more that I can talk about, and over time, I'll give more details on more things that are going on in the market. But this is a good starting point so that you guys can keep your heads off the swivel and concentrate on the prize. Keep your eyes on the prize. Use the VectorVest composite. Trade the chart, not your heart. Again, for those of you who are brand new to the channel, if you like the content today, make sure you hit the subscribe button, hit the bell icon so that you'll be alerted to when new videos like this come out. For all of my regular VV Nation people, if you like what I just did in giving you the state of the economy, the state of the stock market, by all means, please hit the like button. If you've got some comments that you want to put in here as well, use the comment section. I'd love to hear your take on this as well. Folks, this video is over. Until the next time, see ya. Yeah.